All right, let's dive into an invention that pretty much appeared out of thin air, created by a total ghost on the internet. It's an idea that challenged the very definition of money itself, and its story, well, it begins not in some fancy boardroom, but with a secret message. So get this. On January 3rd, 2009, Bitcoin's anonymous creator, who we only know as Satoshi Nakamoto, officially launched the network. And baked right into the very first chunk of data, the Genesis block, they stuck this headline. This wasn't random, not at all. It was a statement. Bitcoin was literally born in the fire of a global financial crisis, as a direct answer to the failures of the banking system we all relied on. So, that powerful opening line really leaves us with the one big question for this whole explainer. What fundamental problem was this totally new, kind of radical form of digital money actually trying to solve? To really get what made Bitcoin such a breakthrough, we first have to kind of jump into time machine. Let's take a look at the world before it existed, and a core problem in digital finance that, honestly, everyone just took for granted, this idea of the trusted third party. This slide really lays it all out. On the left, you've got the old system. Every single digital transaction you made needed a middleman, a bank, a credit card company, someone you had to trust. They held all the keys and they could stop or even reverse your payment. But Bitcoin's idea, over on the right, was something else entirely, a peer-to-peer system. No central boss, no one who could block you. So how in the world did Bitcoin actually pull this off? That brings us to its decentralized breakthrough. You have to understand, for years, creating digital cash without a central server was one of the big unsolved problems in computer science. Bitcoin was the first to finally crack the code. And the secret sauce to this whole thing is the blockchain. Honestly, the easiest way to picture it is like a global digital receipt book. Every single transaction is out there for anyone to see, but because of some really clever math, once a transaction gets added, it can never, ever be changed or erased. It creates this shared source of truth that isn't controlled by one company, but by the entire network. So, how does this actually work without a bank stamping approved? Well, when you send a transaction, it just gets broadcast to everyone on the network. Then, these really powerful computers called miners all race to solve a super complex math puzzle. The first one to crack it gets to add the next block of transactions to the chain, and for their effort, they get rewarded with brand new Bitcoin. This whole competition, which we call proof of work, is what locks the whole network down and makes it almost impossible to cheat. But look, a brilliant idea on paper is one thing. Surviving out in the real world, that's a whole different ballgame. The early days of Bitcoin were just chaotic. It was this fragile little experiment that had to survive in the wild. And through that trial by fire, it developed this really unique kind of strength. And this just perfectly captures its humble beginnings. The very first time anyone documented buying something in the real world with Bitcoin, it was for 2 Papa John's pizzas. And the price? 10,000 Bitcoins. It was a huge deal at the time because it proved this weird internet money could actually buy you something real. Okay, now let's hit the fast forward button. The value of those 10,000 Bitcoins has been all over the place, but at its peak, it was worth over $1 billion. Now, that mind-blowing number isn't even the whole story. It represents the entire world's messy, chaotic process of trying to figure out what this brand new thing is actually worth. Bitcoin's journey has been a non-stop trial by fire. I mean, it was a huge victory when it finally hit $1 in 2011. But then came the disasters. In 2014, the biggest exchange in the world, Mt. Gox, just completely collapsed after a massive hack, shaking everything. Years later, a superpower, China, tried to kill its entire mining industry overnight. Each one of these felt like it could have been the end. In fact, critics have written Bitcoin's obituary over 500 times. But here's the amazing part. Every single time, it survived and actually came out stronger. When a central exchange like Mt. Gox failed, it forced people to learn better security. When China banned mining, the miners just packed up and spread all over the world, which made the network even more decentralized. It's not just resilient, able to take a punch. It's what's called anti-fragile. It literally gets stronger from stress. But beyond its sheer toughness, what makes Bitcoin so different is something that's been hiding in plain sight the whole time. It's monetary policy. It's not decided by a committee. It's baked right into the code, and no one can change it. This policy is enforced by an event that happens like clockwork, called the halving.
Roughly every 4 years, the reward that miners get for securing the network is cut in half. That means the supply of new Bitcoin slows down on a totally predictable schedule. It is the polar opposite of traditional currencies, where governments can basically just print more whenever they feel like it. And the halving is what guarantees that there will only ever be 21 million Bitcoin. Period. As you can see from this chart, we're already most of the way there. The vast majority has already been created. This absolute, provable scarcity is really the bedrock of Bitcoin's whole value proposition. So you take this unique combination of a leaderless network and absolute scarcity, and it's fueled this incredible journey from a tiny niche project for cypherpunks, these privacy-focused coders, to a recognized global asset on Wall Street. And the signs of this shift are they're everywhere. Publicly traded companies started putting it on their balance sheets. A whole country, El Salvador, made it legal currency. And then, in 2024, the US gave the green light to Bitcoin ETFs, basically opening the floodgates for mainstream investment and signaling a whole new level of acceptance. And yet, after all this time, all this growth, all the headlines, the most radical thing about Bitcoin is still exactly what it was on day one. In a world with thousands of other crypto projects, it's still the only one with no CEO you can throw in jail, no company you can sue, and no central server you can shut down. Its leaderless nature is its greatest strength. 16 years after that very first block, Bitcoin isn't just an idea anymore. It's global infrastructure. It proved that decentralized digital scarcity was actually possible, and it sparked an entire industry. And, maybe the source material says it best. The experiment is still running, and so far, it's still winning.